Alrighty, what is up? And welcome back to another amazing episode of How to Invest in Commercial Real Estate.
What up?
Hey,
What's going on, guys?
Too much, man.
loving Oklahoma State football.
Yeah, it's amazing. Turns out Joel's right.
Yeah, they suck again this year.
No, wait. Over the last two games against, is there still Power 5 or is there only Power 4? No more Pac-12. So let's call it Power 4 teams. Oregon and Colorado. We lost 52-0 to Colorado and 69-3 to Oregon. I mean, we're there. We're just right.
Just a couple things go your way. Those things are turned around.
Yeah, that's what, 121-3. We were just close.
And just remember, Oregon scored 69 points in 3 quarters.
Yeah, that's true. They went scoreless the fourth quarter. So
Have mercy on the Cowboys.
Who are they playing this weekend?
They're playing this team called Bye. I don't know if they're going to win or not.
Gotcha.
Yeah. Well, OU fared a little better.
A lot better.
They took out Michigan, so I think we're on the comeback from the last couple of years.
It's looking good. Okay, updates. We just closed the deal in Lansing. Woo!
Yep.
Deal's making money.
Yeah.
Day one.
Got another closing
This week. Yeah. Medical office deal with DaVita in Atlanta. That'll close this week.
And then we are working on another deal just outside Oklahoma City for probably, what would you say, early November? Yeah, mid-November.
End of October, beginning of November.
Yeah.
Good. We need one more. We need to get
one more for the end of the year.
Yeah, we had a push out. So if you or anyone else knows of a deal we could buy before the end of the year, send it to us. We want one. We want it. We got some good debt quotes coming out of MidFirst too. I mean, a lot of good lenders, but MidFirst is looking good.
Yeah, they gave us a good one.
Yeah, rates are coming down. What else?
I think that's it. We can hop into the show. We have an amazing guest with us. Alec is on the show with us today, and he's doing some cool stuff down in Texas. Alec, what's going on, man? Introduce yourself. Tell us about what you're doing.
What's up? My name's Alec. Thanks for having me on, guys. I developed FlexSpace. I've been developing FlexSpace for about 2-3 years now. Got into commercial real estate about 3 or 4 years ago. And yeah, just working on some bigger projects now. So I got a 128,000 square foot FlexSpace development. I'm going to be breaking ground pretty soon and building some retail and also a medical office site.
Okay,
Nice.
very cool. So developing all of this stuff.
All in the same city of. Where do you live?
I live in East Austin.
Okay, so is all that in Austin or?
No, actually none of it's in Austin.
Oh, okay, well that's good.
Yeah, no, I want to stay out of Austin, honestly. It's horrible to build out here. But I like, there's a city called New Braunfels, which is a little south of Austin, about 40 minutes south.
I think I floated a river in New Braunfels.
Yeah, yep, the Guadalupe River. Yep. And then up in Hutto, I got a retail site up in Hutto, and then got another site up in Hutto, medical office, and from Virginia originally.
From Virginia. Okay. When did you move down to Austin?
I was back and forth Virginia and Austin for about a year or two. I went out to a mindset conference out here and started looking at some land, and I just saw that the numbers were a little bit better out here. So
Very cool. So the FlexSpace, I guess let's go into detail about, what FlexSpace is. Maybe some people have heard of it, but aren't particularly sure. How would you describe FlexSpace?
And how does it differ from industrial?
Yeah.
Like warehouse, I guess.
yeah, it's just a form of industrial. It's a small bay industrial. So when I build, I try to go for 12,000 square foot buildings or a little bit less than that to stay under the sprinkler limit. And I use metal buildings. There's a lot of different niches in the industrial world. Like there's small bay distribution centers, large bay distribution centers, that large tilt-up product that you see all over that is pretty much vacant everywhere. So there's a lot of different niches in industrial. I just chose FlexSpace, and I think it's performing pretty well right now. So,
But FlexSpace. So I've never done FlexSpace before. I know you guys probably have, but How is it different? I mean, is it like warehouse space? Is it office in the front, warehouse in the back? Is that typically what FlexSpace is? And it's about a 25 by 40 space or so approximately. Is that kind of what you're getting?
Yeah, so I'll spec out like 10% office. If a tenant needs something more, I'll do a TI. But yeah, like 10% office.
And then how big is the one you're developing right now, did you say?
That would be 120,000 feet.
Okay.
So 10 buildings.
Oh, 12,000 worth of buildings, 120. Okay. I can do math too.
And then, smart ass. But what I wanted to ask was, do you leave all 12,000 open, and then as tenants come along, they say, "Hey, I would like 3,000," and you put the walls up, or are you predetermining the size of the units?
Yeah, so FlexSpace is generally spec. So I'll put up the buildings. So this site will be a staggered site. So there's I think like a 3% slope on the site. So I'll have the building staggered. So like some of the buildings will be split in half. So there'll be two 6,000 different elevations that are split by like maybe a foot and a half. So the largest bay I could have in those are 6,000 feet. So I could split those up into smaller bays, or the biggest one could be 6,000 feet.
Okay.
And you said you're speccing all of it. I mean, do you have any pre-leases whatsoever, or is the business model always just go in, put it up, and kind of lease it once it finishes out?
Yeah, everything I've done so far has been spec, but this site's on 35, so there's going to be around like 50,000 cars passing by every day. So there's a good chance I'll be able to get some of it pre-leased. So I'm working on that right now, but so far no LOIs have been signed. So.
And how are you structuring the debt, and how are you raising the equity for that? Yeah, and what kind of return metrics are you forecasting?
Yeah, I'm doing a phase project. So when I say 120,000 feet, this is over like 3 or 4 years. So it's nothing happening immediately. So I'll do like 48,000 feet in phase one. So I'm raising 4.5 million equity for that, and the rest will be bank debt. So it'll be around 5.5 million bank debt. And then after phase one is done, there should be enough equity in the site to just bring in debt for phase two and then phase three.
And how are you raising the equity?
For this one, I'm doing a 506C. It's my first time doing a 506C. I've generally done like JVs or hard money in the past.
And how's that going?
It's interesting. I don't really enjoy capital raising, but we have a lot of people interested in it, and I have a couple like co-GP partners or family offices that want to take the whole deal. I'd like to raise it myself to maintain as much control as I can, but that's always a possibility. So I don't know. Have you guys ever worked with like a co-GP or a family office before?
Not necessarily family office, but we've done some co-GPs and we've done some larger, more institutional check writers, in the several $1 million range, and they definitely command, terms and agreements and back end promote. They demand a higher preferred return. So I totally get it. Going the 506C route, you can definitely keep more of the deal for yourself, but it sounds like you've got a good backup plan with some of the family offices.
What IRR targets are you shooting for? Is there a preferred return, and are you gonna? I mean, it's a new development, so probably no cash on cash.
Yeah, it'll be a 12 pref. I'm gonna target a 22% IRR. I think I'm gonna smash that, but 22 is what we're targeting, and I think that's market. So for this type of product. Cash on cash, that's a great question. Because it is a phased project. Like if I did it all at once, like how cheap could I build it compared to what I could lease it for? It'd be a pretty high cash on cash. But another reason why I'm phasing it is market absorption. If you build it all at once, there's a real possibility like it could take like a year and a half to lease. So I'd rather build over time to make sure that the market's able to absorb it.
Yeah, and on that, I guess everyone is feeling comfortable with the market absorbing it, right? We don't do speculative development just because of that risk factor. I mean, it's there. Obviously, something is going on in New Braunfels and the other city you mentioned to where you just know if you build it, they will come.
Yeah, they'll come. Well, so this site, it's like a little bit north of New Braunfels. So when I got under contract, there was like no development in sight for like for miles, and I just went down there Monday, and there's already like I want to say like 500 homes up and people living in them, and there's a Costco breaking ground in like this week actually. So.
Well, I got a couple of questions for you that I think that'll help our listeners kind of wrap their head around the project. So I'll just kind of go one by one here. What should you pay per foot for land that you're going to put FlexSpace on?
That's a great question.
That's a really good question. I'm gonna. My first answer is going to be kind of an annoying answer, and then I'll dive in deeper, which will be great for listeners. It depends, and I'll explain why it depends. So I got this site under contract for $577 a foot. I just found a very comparable site, a little bit south to this one. This one's probably about 30 minutes south in San Antonio. It's a 7-acre site, about $6 a foot, so basically around the same price for land. The leasing will be pretty similar. I'd say probably $1 a foot less in the San Antonio site, but the cap rates in San Antonio will be closer to an 8 cap, where on this project it'll probably be closer to a 7.5 cap. Running the numbers on it, the person in San Antonio would have to pay me $1 million to build a development to get the same return as the New Braunfels site, for example. So the San Antonio site is still a good deal, but it's not like the New Braunfels site, because it's on 35 and can get great leases and get great cap rate. It really comes down to what you can pay for land is like, what can you sell it and what can you build it for, and you just work backwards.
So that leads me to my next questions. So stepping away from the price per foot on the land, what is the all-in price per foot on the development? So like, let's say you're 48,000 or 120,000. What's an all-in price per foot on either one of those numbers?
Yeah, if you talk to a GC, they'll tell you $120 for site and shell. If you GC it yourself, or if you are building at scale, you can do it cheaper than that.
Okay, 120 a foot, with a third-party GP or GC, I mean,
including land.
Yeah, and that's for site and shell.
Yeah. Okay.
So,
wait, that includes
not including site purchase, site work and shell.
Okay, it doesn't include the land.
Yeah, but your land basis should be closer to like probably $20-25 a foot.
Okay, so easily all in 145, 150 a foot. Okay, I get that. Now, what are you planning on renting the space per foot for, either per month or per year?
Yeah, I think the site should average to be about $1,750 to $18 a foot, and then I have 3 acres of outside storage there, so I'd probably get like $5,000-6,000 a month per acre for that.
Okay, at 17, 18, that's pretty high. I think what's it going for here?
I'd say more like 9 or 10.
9 or 10, yeah.
Brand new space though, I would have to disagree. I mean, we've got brand new small bay stuff going up in Owasso, and I think they're asking 15.
Oh, okay.
15, 16.
Yeah, brand new probably.
What market are you guys in?
Tulsa, Oklahoma.
Okay. There's probably some good development opportunity there. It's growing.
And I'm assuming it's all triple net, so it's $17-18 a foot plus triple nets.
Yeah, triple nets and techs are a little expensive. It'll probably be $4 or $5 a foot for triple nets.
Yeah, that makes sense.
Because of property taxes, or in Texas are high?
Yeah, I think property taxes are a little bit higher than other spots.
So there's no play to. Are you done?
Yeah.
Okay. There's no play to keep it, refinance it and enjoy the cash flow. You think you're strictly a developer of these type of, product, and then you'll just do it again. I'm assuming.
Man, I love to hold. I love to hold anything on 35. So my goal is to hold it. But I'm bringing investors on. So I've structured my PPM to buy them out after phase 2 and do phase 3 as a separate project. But I'd like to hold the whole thing if I can.
Very cool.
So a lot of our listeners are kind of either just getting into commercial real estate or are kind of wanting to get into commercial real estate. So I want to kind of go back and ask you, how did you, if you had to sum it up for people, how did you get started in commercial real estate?
Yeah, it's all about who you know. So I was listening to a lot of like podcasts and whatnot while in college, and I bought my first duplex out of college, and I eventually met people who were like flipping warehouses and like what you guys were talking about, medical office buildings and other commercial assets, and I'm like, holy cow, this way more profitable than, doing that with houses. So, and then eventually I met a guy at a conference who's a developer, and I'm like, oh, you could develop. I didn't realize that this was something doable. So it's just meeting people, and also like let's say you're 40 years old and you've never developed before. Like, go surround yourself with people who are 35 or 40 who are developing right now, and your mindset will change pretty quick. Your habits will change pretty quick to adapt to the people around you.
Love it. And you had to get sounds like a $5.5-6 million loan. Any co-signers, or you have enough assets now that you can get that on your own?
No, I'm tapped out on loans right now. I'm bringing on a key principal for that, and that's another thing with real estate. You can solve almost any issue. So let's say you don't have enough money, you can raise the money. If you can't sponsor the bank debt, you can find somebody who can sponsor the bank debt. If you can't find a deal, you can find a broker who can find a deal. So it's all about who you know, really. So
that's what we've been telling people.
yep.
I completely agree.
Who you know and have a good attitude. So
Yeah, we tell people, the younger people who are trying to get into it, you can always find somebody. You can always find an expert, or you can always find another sponsor to help you. Mm-hmm. So
it's funny. I got into a room of a bunch of developers, kind of following that advice and train of thought, and I came out of that room not wanting to be a developer.
yeah.
Yeah. Well, rough business. It's a rough business.
Well, it sounds super interesting. I think FlexSpace has taken off in a lot of different markets. We see it here where we are. Sounds like where you are, and being right there off the highway, I'm sure it's going to be an awesome project. So is there a website if people are interested in what you're doing, or they want to learn more about developing FlexSpace? Where should they go?
yeah, land-play.com. That's my website. You can check out some of my projects I've done, and if you want to invest, there's like a little portal to invest. If you look me up on LinkedIn, Alec McElhaney, or Land Play, I think I'm the only. I've never met anybody who had a company named Land Play. I was surprised nobody took it. So I think if you Google Land Play, I'll be the only thing that comes up. So
Awesome.
Well, we may have the listener who was looking for the next FlexSpace investment in New Braunfels, Texas, who's just going to fill this whole thing up. So even though we're not affiliated with it, I hope you can get some investors from here. I hope somebody saw it and thought it was interesting. I certainly, loved hearing your thought process on spec development. I'm kind of scared of it myself, but I know a lot of people are doing it. So I'd love to hear, like you said, just how people are getting comfortable with it, how they're doing it. It seems like you're phasing it a little bit, which seems like a smart idea. But yeah, super interesting stuff, man.
I feel like Flex would be pretty good in Tulsa if you guys ever do a Flex. I'd do Flex and outdoor storage on Oklahoma. I feel like that would do really well.
Well, if we come across some land and we think we want to put some Flex on it, we'll call you and partner up.
Let's do it. I'm in.
All right, Alec, thank you so much. Guys, thanks for listening. Anything else, Braden?
Nope, that's it. We'll see you guys next week.
Thanks.
Thanks, guys.